I'm going to start with an introductory presentation, picking up on some of the research at the moment that Bonnard have been doing. So I'm going to hand over to Samuel, Samuel Vertrack, who's CEO of Bonnard. He's going to give a presentation now. That'll put some of the facts and figures that you'll be able to see, and then we'll be able to discuss those in the panel that comes afterwards. And there'll be plenty of opportunity as well for questions. If you've got questions around those research elements, we'll take those afterwards because Samuel will also be in the panel. But in the meantime, if you could join me in welcoming Samuel, because we can do it and clap together. Let's do that. Samuel, welcome.
So it's really good to be here after 2 years, and thank you, Richard and Torsten, for organizing this platform for us in student housing. I want to welcome all the people here. We have about 100 people here and 100 online. Today, in the first 15-20 minutes, I will provide an update on student housing across the demand, occupancies, rents, saturation of the market, transactions, yields, and investments, so that I provide a food for thought and conversation later on that we have a panel of distinguished guests. A bit about us. So Bonnard is a market research and advisory firm. We're headquartered in Vienna, 14 years of mileage. We monitor 8,000 assets around the world in 140 cities, completed work on more than 460 projects, and have become a partner and supplier for data, research and consultancy for top brands that are exposed in student housing. Our model is that we work on subscription or ad hoc assessment reports. So student housing as an asset class has made it to the middle of the sort of investment ranking on a 15 out of the 30 asset classes in terms of investment popularity. However, it's a number 4 asset class from among the major asset classes after logistics, healthcare, and PRS. All the other mainstream asset classes actually are occupying the 16 and onwards spots. So what has made student housing so demanded recently? Well, it's established asset class, stable, documented, transparent, but most importantly, it's a defensive, counter-cyclical asset class. So the tough times actually do good to this asset class. So be it 9/11, GFC, or recently the pandemic times, it actually increased the demand for student housing. After initial drop of about 5 to 10% of occupancies, but we are back on almost full occupancies in September 2021, as you will see in later stages. But in general, student housing is an age-determined asset class, and students need to study, and they confirm they want to study on-site more than online. The asset class confirmed the defensive nature and counter-cyclical nature of this asset class. So when there are challenging circumstances, we see more students. In Germany in the last 70 years. It has been confirmed by more than 6 occasions of this nature, where that actually boomed the number of students. So where are we now? This is sort of an abstract from our daily student housing market monitor that we issue to our clients and partners. After 2020, when we had about 5 to 10% occupancy drop, so less than hotels, less than office, less than retail, student housing held it quite firmly. We are now seeing that the private PBSA, private purpose-built student accommodation premises are filling up. The leasing take-up is very strong. And most of the modern private PBSA is almost fully occupied. For this reason and this presentation, we have conducted a research in September 2021 to see where the markets are. So these are the occupancy levels per country. The European average is 94% as of September 2021. We see some of the countries doing better, like Germany, Netherlands, Belgium, Poland, and France. Some other countries, Mediterranean countries and UK, a little bit less so, but still most of them north of 90% of occupancies. In many geographies, the school year has not started fully at the time we did the research, so it might be that the occupancy is ramped up to higher levels. We have some good panelists that will be able to comment on that as well, as they manage big portfolios. The reasons behind this is that some of the students could defer their studies for a year, but it's very difficult to defer their studies for 2 years. Many students consider the destination of their study to be their home rather than mama hotel. As I think I read it in an interview with Rainer, you had that idea that we have 2 years of freshmen now, because the students who couldn't come last year came this year, so we have freshmen and sophomore for the education, being 2 generations of freshmen for student housing, and freshmen has been always the most targeted audience for private PBSA. So that boosted the demand for students, and moreover, we have more 18 years old, especially in the UK, and there is a sort of propensity from the public PBS, more propensity from the public to private, because private PBSA handled COVID better. They have more single studios, less of a shared product, and this brought more students to seek accommodation in private PBSA or their families. Long story short, globally, not only in Europe, the student housing confirmed its defensive counter-cyclical nature, as well as the students confirmed unilaterally that they don't want to study online. They can do it for a month or a semester, maybe 1 year, but not necessarily 2 years or more. So there is no onlineization of education as we see it in the online effect or the home office effect in office or retail. So the COVID actually didn't have a damaging effect, but rather confirming the fundamentals of this asset class. Rents, private PBSA rent development as of September 2021. In general, the rents across Europe increased by 3.1%. Okay, I was told that the pointer is useless, and it is. On the top right, you can see that average rent growth was 3.1%, while the average inflation was 1.7%. So student housing is increasing not only the occupancies, but also at the high rents. And that's a very strong story for the asset class. In some geographies, younger markets like Poland, the rents grow much faster. Now, comparison of private PBSA to private rental market, or HMOs or flats or apartments that are freely on the market. That's up to date. First, we need to understand that private rental market went about 8 to 12% down because it was diluted with all the Airbnbs on the market. So the private rental market is currently down in average, let's say 10%. But still, private PBSA, being marked in white on the left, in most geographies is more affordable than private rental market. So it's competitive to flats, and therefore, sort of, as it is living with services and community, not only the roof, as it is in private rental market, more and more students opt for this type of accommodation and product. So where is the market in terms of saturation? In average, there are 170, 180 new schemes coming to the market per annum when you look at UK and Europe. So what is it doing to the market? In US and UK, which are considered most mature market, the provision rate, so bed to student ratio, so how many beds we have available for the overall number of students in the particular city. In US and UK, it's 31%, which is considered to be mature. In some cities like Liverpool or Manchester, it's more, but in some other cities less, but in average 30%. In continental Europe, in average, it's in between 14 to 16%, as you see on the white. Therefore, the continental Europe is twice less saturated as the mature markets and has a room to grow. So later on, we will see on an example of Berlin that the market is nowhere close to saturation and is actually much more difficult to find opportunities to invest than capital that is available. Transactions, they have not slowed down. 2020 was as strong as 2019, both in continental Europe and UK. And 2021 is shaping up nicely, as we expect many transactions to happen now after the occupancies have been confirmed across the markets in September 21. There is a pent-up demand. There is much more capital available for student housing now, especially institutional capital. The problem is rather the opposite, that there are not enough opportunities to deploy the capital or transact. The average transaction value per room has not changed much. In continental Europe, it's 137,000 per room, while in the UK it increased due to some more expensive transactions. And over here, as a selection of some of the deals, we can see here the bigger transactions and portfolios with approximately 25 to 50 bips portfolio premium. The assets are transacted more expensively, so we see that the average transaction value is way about 140,000, as we see in the UK and Europe. So it's 170, 200,000. Yields. So in the first third of the slide, you can see the comparison of student housing yields across the countries to 10 years government bonds. Then you can see the comparison of asset classes in the middle. You can see that student housing is actually way above the other asset classes, so there has a room to compress still. And the last third shows the prime yields in student housing across the 3 years, 18, 19, and 20. And you can see that either the yields stay or compress furthermore. When we look at the 10 years, the yields usually compress in the zone from 6% to 4.5%, so about 150 basis points. And this is the yield game that some of the investors play in new markets where the yields have the room to compress. The lower yields are in Germany, 3.4 in this asset class. Even some of the assets might transact below 3 as some of the transactions are shaping up. Over here we see the comparison of student and multifamily. So you can see that the BTR compared to student is about 100 basis points more compressed. It's mostly across all the territories except some of the geographies you can see over there. And that shows only the room to compress furthermore on the market. So where is the market in terms of investments? Out of the 17 countries in Europe and 350 cities, we have 194 portfolios actually. When we combine the different owners of these portfolios, which are 125 hands that own these 190 portfolios, in combination, we have 230 portfolios in about 3,000 assets distributed. Only 40 of these portfolios are greater than 5,000 bets. So these are the big portfolios for sort of core capital. About 76 of these portfolios are in the mid-range of 1,500 to 5,000 bets that are still in development. So it's a combination of core plus, sometimes opportunistic capital. And all the rest are the very small portfolios that are still in hands of high net worths and family offices and not that are under the radar of private equity and institutional capital. So in terms of potential, the transactional potential from among the portfolios, we have about 95 billion euros transactable assets for an average market value. Most of it is in the UK, followed by France, Germany, Spain, Belgium, etc. So this shows the overall transactable potential. Not many people are selling. This is theoretically transactable, but it shows the total asset class potential in the region. In terms of investments, so new development potential in Europe, as I said, altogether we have about 600 assets now in construction, development or planning for student housing across Europe. We talk about 12.7 billion investment potential to new stock, and that represents opportunity for the value add and opportunistic capital. And the last slide, a little bit of a case study from City of Berlin to show the true nature and status of student housing. Berlin is probably the most signature city where the asset class is, so that's why we selected this one for this occasion. So we see 150,000 students, out of which 43,000 international, almost 1 billion transactable stock. And we see at the bottom the total provision rate is 10.6% bet to student ratio. But on the top right, you can see forecast comparison, so how many new students will come and how much of a supply will come to the market and how the provision rate will change over the next years. And as you see, it goes from 10.6% up to 11.9%. So even though there is quite a significant pipeline, not much will change, and the opportunities are not hitting the roof of the saturation, and there are sort of many more opportunities to grow and invest in student housing. With this, thank you very much. Thank you, Richard and Torsten again, and over to you.
Great. Thanks very much, Samuel. Super. Really, really good presentation. Thanks very much for Samuel. And we'll be able to pick up a lot of those points. If you grab a seat, Samuel, you can be in the panel, and then that's all good. So we've got a super panel coming up. Guys, if you take a seat, and then I'm going to hand over to Frank here. Many of you may know Frank Uffen anyway, but just to give a kind of introduction to the session, I think, am I right, that we'll be able to share at least some of those slides with people, or at least they'll be able to get a link to them, Samuel. So perfect, that's great. So I'll briefly hand over to you, Frank.
Yeah, sure. Thanks, Richard. And indeed, very, very nice to see so many people again after 2 years. I think, as the slide showed, the market hasn't really calmed down. In fact, it has resurgent, but it would be very good to see also today from the panel how that translates into the specific markets, and also if this was something that maybe we can have learned from as well. The focus in the beginning was on student living, but we also want to talk about micro-living and co-living, because those markets have really emerged as sort of the markets where community, or the idea of living together in shared facilities, are taking shape, and also where a lot of innovation has happened in the business models. The Class Foundation that I represent is a platform for bringing all those groups together and basically learn together from what has happened. And one of the things that is also going to be a topic today is like how do we actually enable, through these investments, through these operator-driven models, to create social value as well? Because one of the things that a lot of institutional investors are looking for at the moment is investments that actually has a positive impact on society, on the communities that we're part of. And so the class had a summer research this year specifically focused on understanding if student living had a positive contribution to student well-being and also to the living experience. And we tried to find out that there is actually value in there and that it also is reflected in the numbers. So the next, that's me. Yeah. So the first concerning thing, unfortunately, was that when we did the research in the Netherlands in June, around 2,000 students responded that more than two out of 5 students reported not feeling well. So this shows also that although we are often talking about the real estate part, we're actually talking about, people that are in part of our communities that are not feeling well. And so for student accommodation providers, this has been a major learning curve of how do we support students, how do we understand their needs. What was more concerning, though, was the difference between domestic students and international students. And you will know probably from the market that a lot of the trends that drive the demand is coming from further internationalization. This is relevant in student accommodation, but also in micro-living and co-living. An increasing number of markets in Europe, in particular, are attractive markets for young talent to go to. It used to be the UK, it used to be the US. Probably in your own family, you know reference of people moving abroad for studies. But now it's very, very okay and normal to go to France, to go to Germany, to go to the Netherlands, because there's English taught education. And often also companies are now hiring young talent without them knowing the local language. This is a major game changer in Europe, and it basically enables a whole new demand to flow into the markets that we're talking about. But again, as student housing providers, as co-living providers, as micro-living operators, we are asked basically different things than a traditional residential product. We need to take care of communities. You see it in the investments in communal facilities. You see it in the investment in programs, in social activities. And it's great that we see now that actually the living experience as well as the well-being rates have increased for those that have access to those. So there's a real evidence for the market also and for the investors that it pays off to invest in that. We're going to talk a lot more about that hopefully today, but if you're really interested in this topic, please come to Amsterdam. We're going to be offline again for the next class conference in November 17 and 18th, including site visits to some of the latest projects that have been delivered there. But that is a quick background on what's happening in the market.
Great, thanks very much. Thanks very much, Frank. So yes, really, really good panel. Thanks for that introduction as well there in terms of the foundation, which is good. So let's just do some brief introductions. Yes, you can be wherever you like, Frank. That's let's just do some brief introductions. And both Frank and I will be moderating this, so as you can see, there is no escape for you at all. Let's start with you. Just a brief introduction from you, Rainer, just so that people know exactly who you are.
Sure. Good morning, everyone. My name is Rainer Nonnengasser. I'm representing International Campus. Personally, I'm in that sector now for 11 years. International Campus started its journey 10 years ago. We're covering Germany, Netherlands, and Austria. We got currently 5,500 beds in operation, so belong to the few with bigger portfolios. And got also a few thousand beds in delivery for the next 12 to 18 months. And we have recently launched, a few days ago, a second brand which is more focused on young professional living. Some call it micro-living. And this is something which we want to roll out in our geographic territory over the next years as well.
Great, thanks very much. Edvard.
Yeah, Edward Verluijn from Rockfield Real Estate. We are from the Netherlands. We are 7 years ago we started with student housing, but we also develop a lot of young professionals, and we did it also with a concept idea. We have our own property management. We are a developer, but also an investment manager. So we have the total package. And now we have about 2,000 student housing and about 1,500 young professionals. and we are two funds, and now we created a third fund, EVR Dutch Residential, with German investors. And the focus is also on affordable housing, but also on students. And it mentioned already before that ESG is one thing that's most important, even getting more important. And especially with our community, our own community managers, with our property management, the S of ESG, we will talk about it later maybe, is getting more and more important. So.
Perfect. Maybe just to start, it would be good to get a sense of any reaction to Samuel's presentation, but also it would be really interesting just to pick up on where you see yourselves now. Obviously, there's been a lot of discussion around the potential impact and influence of the pandemic on student housing. But for those who don't know, let's just have an update on where you're seeing it. Let's start with you, Rainer.
Well, I think every one of us 18 to 20 months ago was facing a situation where no one was prepared for. And for sure we raised questions on how can we react, how can we ensure well-being for our tenants, and what does it mean to the business model per se. We learned pretty quickly that we had to apply measures which were mainly driven by regulation, which led to a situation that even during the hardest lockdowns we have seen in Germany and also in Austria, more than 60% of the tenants choose to stay with us instead of going home to their families, which for us was a proven a good sign that we took the right measures to make the people feel comfortable on our schemes. Secondly, I think there was, as in other asset classes, a public discussion in the media. What does it mean for the asset class? Will student housing recover, or is this now more or less the end of university education and presence, and all these things that I think you all witnessed over the last months? And as of now, it becomes pretty obvious that young people desperately need to leave home, are looking for a next step in their personal evolution after having finished school. Universities have proven that they can do online, but they also declared that they want to do offline. That is a key and instrumental part of their business model, to do offline lectures. And finally, looking into the tenancy figures that Samuel has just put on the screen, the asset class itself has proven extremely resilient, and those who, for whatever reason, have taken stronger setbacks in their occupancy in early 2021 or late 22 have all recovered, and in the territories we're active, we see a lot of spots who are currently flooded with students. For example, in the Netherlands, a lot of universities mail their freshmen, if you don't have accommodation booked, stay at home, there is no place available here. Similar situation we see now in Germany. So bottom line, I think the asset class is vital, has very strong growth potential, which is also underpinned by the coverage rates, and there are in principle similar trends all over Europe, regardless whether you go to Portugal or to the Nordics or Germany or into CEE.
Okay, great. And Edvard, I suppose, what's your perception of it from your business point of view?
Well, if you look at the market now, it's a crazy market in the Netherlands. There was a report came out last week that we have a shortage of about 26,000 units for students, and it's going up to 50,000. So the only conclusion you have that the student, the international student, but also the Dutch students who going away from home, is very underestimated and realizing a very big problem in the Netherlands. That gives also opportunities to invest and to create new properties for them in the cities. But still, there are two reasons, I think, what we notice. That's Brexit, mentioned already before. A lot of students from Europe are coming to the Netherlands because in our universities, English speaking is a very common thing. and also Corona is underestimated when people want to get together. One thing is familiar for the Dutch students. We have active student associations, fraternities, and there's an explosion of people who want to join student associations. It never happened in the last 10, 20 years. So many people want to join, and that's a very big reason how Corona is working with young people, and they want to join, they want to act together, and they not want to stay home and do online education. So in Holland, that's a problem right now. And it also is a sign that the municipality and the government should be student housing higher on the agenda, because students, and especially also international students, bring knowledge to your country and to your city. And people stay and maybe work or do a startup. And smart people with knowledge attracts new companies. So I think the student market is very underestimated by the Dutch government, and should be, what I said, higher on the agenda.
If I may, besides the good news, there are also some changes and challenges that COVID is bringing, such as there is more sort of demand on OPEX, because we need to spend more investments on taking care and hospitality and sort of all the contingency plans. So there is some additional pressure on OPEX. Also, the product with double rooms or shared rooms is not so easy to occupy anymore. So some of the operators need to put some discounts over there to occupy it. But also for the future product, those who are now in construction and need to sort of complete the product against the pre-COVID plans with shared rooms are changing the plans while having inflation in construction costs. So not to mention ESG, which has been said loud and clear that whoever is not an ESG friendly product might not be transacted 5 years from now from private equity to institutional money. So this triple effect of single rooms, sort of construction inflation and ESG pressure, there is a downside of these times for student housing that COVID influenced.
Yeah, this OPEX is in particular interesting because indeed it was always something that was unique to the student housing market, but also during the COVID in particular costs increased. But it was also part of the value proposition towards the universities and the city planners. Do you see a shift in terms of the other stakeholders involved in the creation of developments in terms of thinking? Or do you also see obstacles there for the next wave of development when it comes to planning or understanding of the market?
Well,
Edward,
if you look at the Dutch market, it's the planning. You have to be the municipality has to put different locations with the zoning plan. The priority has to get higher in the Netherlands, and then still your goal is, especially with the AAG, to create new buildings, with new standards, and but it will take time. So that's also the problem we have now. Now the problem is high, but we did not think about it 3 or 4 years ago, and now we're too late, and we have to create something, and it's maybe ready in 3 or 4 years. Yeah. And you can think about temporary housing. That's also a possibility we did in the Netherlands, because those things can happen again.
Yeah. And the willingness to talk about parking, for example, in Germany, always a big issue.
Absolutely.
Had to bring it up.
That is now, let's say, shifting to lower priority in a lot of municipalities due to the fact that there is a change in mindset visible as regards mobility. But regardless whether you look into Germany or you look into CEE or into Iberia, as just mentioned, planning is the key element. And if you allow yourself to take 5-6 years to get a building permit in some CEE cities, or in Germany we have situations where it takes 2 to 3 years. That it's, I wouldn't say it's unacceptable, but it doesn't help. As said, I'm in that business now for more than 10 years, and I think the PBSA part in Germany sums up to 50, 60, maybe 70,000 beds, which was more or less zero 10 years ago, which means on average 6,000, 7,000 beds per year, and the number of students is rising by 100. Yeah, when I started in that business, we had 1.8 million students in Germany. We're now 3 million. Yeah, out of those 3 million, 2 million need to find accommodation in the private rental sector. They're putting pressure on a supply which is family focused. They're putting pressure on rents which affect families more than students. Yeah, so there is a circle which needs to be broken, and this can only be broken if we, in Germany and similar in other European countries, manage to put a framework in place that allows for more and significantly faster development of stock, because this is the only solution. It's not rent regulation, it's not car parking regulation, it's not increasing energy efficiency requirements, it's just enabling those who are active in that market to build more and faster.
And that's interesting. I mean, I think, Samuel, you mentioned 94% in terms of occupancy. Was that right in your stats? I'd be interested just to see what you're seeing in your particular markets as well. Maybe just starting with you, Edward.
It's about 100% in the Netherlands now. You can say 120% because the students are standing in front of the door, they want to get in, but we don't have rooms available. And
so this really picks up Reiner's point of there's not enough development at the moment.
If you see now that also the topic is getting more clear in the Netherlands, because students are protesting now, so they get into the newspapers. That never happens in the Netherlands before. So there's really a crazy period going on now, and I think that's good because people now see the problem, and then we have to break some circles. We have to do things differently. We work a lot with all the universities in the Netherlands, but also the municipality and the government must have to do things about restrictions to get the process going on faster. Otherwise, we have the problem next year again.
And in that context, we should not forget that the true internationals, meaning Chinese, Australians, Canadians, are still absent because of visa and travel restrictions. So for Germany, they would be good for another 100,000, and also in other continental European markets, they would put an additional pressure on the sector, and for sure those are missed by some of the operators, because especially Chinese are prepared and willing to pay higher rent than domestics. But as regards the demand-supply ratio, it doesn't make a lot of a difference. And when they come back in 2022, they will increase the pressure on the segment additionally.
And are you? I mean, it's interesting that international side. And does that mean that at the moment there's a kind of, I suppose, gap between, there's higher price facilities that are designed for those international students, but actually those international students aren't there, and so there's a kind of mismatch at the moment?
I wouldn't say it's a mismatch, but in continental European markets, you find hardly no scheme which is designed for Chinese or Australians. If you look at the markets per se, for example, the London market, I think it has an effect, their absence. And in other markets, you also have stronger international presence. We, for example, have opened a scheme recently in Prague with 650 beds, where we have 85-90% non-domestic students. And the one of the biggest group there is Spanish, and this shows that there is a very strong international traffic on higher education, also within the EU. Underpinned by Erasmus and other programs. And if you entertain yourself in looking into the list of preferred Erasmus locations 5 years ago, and today, 5 years ago, it was primarily beach destinations. It was Valencia, it was Barcelona and others. And there is now a shift taking into consideration health and safety aspects, taking into consideration the rent, the cost of living, for sure the university quality, but also what is the economic situation the country is in. And that makes especially a lot of young people from Italy, from Spain, also from Greece, look into other destinations across Europe.
Maybe on top of the this missing long-haul international student cohort, there is additional group. Probably Frank can confirm it, as you have the most hybrid scheme in probably in Europe. Is that we have more young professionals who are more mobile, more flexible, less willing to take on commitment of mortgage or something, and therefore we see this additional audience opting for staying in originally student housing premises now being open to this new target audience, and therefore we have new occupancies from this sort of age group of fresh graduates that are not ready to commit.
Yeah, no, that's true. And as I mentioned earlier, this is mostly driven by the fact that these markets are becoming more attractive as labor markets, not just higher education, but also as labor markets. And within Europe, of course, you have a massive potential for internal migration within the EU that is unrestricted, but also continues to be attracting people from outside of the EU because of those conditions, especially higher education markets that offer access like a year search visa for talent to stay in the market. And that causes a lot of pressure on local housing markets and a lot of political pressure, quite frankly, at the moment as well, because people are competing for the same scarce assets. And we see a lot of student accommodation providers in the European market, which is different from the UK market, not only catering to students, but also to young professionals. And this is maybe something that you have also experienced both of you have. Do you make a differentiation then, or is it actually okay to accommodate students and young professionals in the same buildings with the same brand? What is your strategy?
We prefer to put them together, and we have realized several projects where there's a mix from student and social and young professionals. And with our community and our concept, our cohesion or student concept, it's very mixed together very, very well. It keeps a community, a different community. When some student is done, he can go to another apartment. We also have friends apartment. There's co-living, where they share, they have their own bathroom, but they share the kitchen. And the concept is very popular for in Holland because it's affordable. And for them, it's a good way to start working with their salary. So you give them a career in the housing development.
Yeah.
First of all, I think it's a logic consequence that young people today who are way more mobile, way more flexible, way more, let's say, urban nomads, after having completed university, looking for their first jobs, are looking for a similar type of accommodation model, like the one they have enjoyed and benefited from during their universitarian education. And I think this describes the growing potential and the huge potential for, whether you call it young professional living or micro-living or co-living, is, let's say, then an individual interpretation of the operator and where he puts emphasis. But this is a segment which we believe has a high potential across Europe in the next decade. We as IC Campus have made similar moves like you did in Austria and also in Germany, and came to the conclusion that we want to create separate products, market separate products, because we believe that sooner or later there is a point where the requirements and the amenities young professionals look for and require are different from those of students. It's no longer than kicker and Xbox and beer pong and party all night. Yeah. It shifts into other requirements, and to reflect those, we have decided to go separate product ways.
I also see someone from the Italian market in our audience. Walter, can you maybe share your experience recently on the Italian demand side? I know I catch you off guard, but I'll hold the mic.
Thank you very much. No, also in Italy we are really sorry. Also in Italy we are really happy about the actual situation because after the COVID, the market restart. We have a full occupancy in our residence. We manage more than 9,000 beds in Italy, and so we can confirm what is happening also in the other countries, like in Germany, like in the Netherlands. For sure, we have a different problem, like I say to you before, that we have a great pressure on the private apartments, and I totally agree with Rainer because it is necessary to increase the stock to be more competitive, like is happening in the Netherlands. That's all.
Thank you very much. No, it's indeed. I think as your numbers were already pointed out, it's now. It started in the Netherlands, the markets. It started developing in the north, but also now Spain, Italian markets are seeing the same pressure, the same demand, and a lack of supply. Quite frankly, also that will be structural.
And are we beginning to get demand? I mean, you mentioned there that there's demand has dropped for the moment from Australia, from China. But is there sort of new demand coming? You know, I'm thinking of India, or I'm thinking of North Africa, or different places like that, where you're beginning to see, you know, a higher growth in terms of incomes, higher demand for that sort of education, and potentially, therefore, looking at Europe for, you know, seeking those opportunities.
I think these routes or these routes are already established and they are there. If you look, for example, into Portugal. By history, they have strong connections to Brazil, to Angola. So their biggest group of international students comes from these countries. Yeah, and in Germany, you find a lot of young people from India. This is also due to activities of Goethe-Institut, Deutscher Akademischer Auslandsdienst, and these organizations that support international students who by nature couldn't afford to study abroad in doing so. And for sure, these are growing segments.
Okay, good. Interestingly as well, that there's a lot of people from Portugal. I can see in the comments from Portugal in the online live stream. There's a kind of active comment coming through from there. And of course, if anybody's got any questions or any comments that they want to give from the room, please do. It's designed to be open and interactive because it's the first time we've had the chance to be for some time. So feel free to just put your hands up or mention anything. It would be interesting as well, just, you know, just in terms of the investment side, to look at where you're seeing investment appetite. You know, is there, you know, we've just had a session on logistics, for example, where they're seeing huge amounts of capital looking at the, you know, looking at the sector, which is then challenging for them in terms of pricing and those kinds of things. What's happening in this sector? Because also that appears to have, you know, had a very strong performance, you know, been very resilient in the crisis.
Well, it's a niche market for investors. Not all the institutional parties invest in student housing. Mainly in housing and other aspects, but you see a lot of institutional organization in the Netherlands to focus more on the student housing because it's getting more professional, and we see a rise that the interest is going up, but that's also to do with the projects we make. The student projects for 10 years ago is totally different than today. And they see that the management of those projects can be also realized in an affordable and ESG way. So I think more investment is coming to the student housing if you create a new projects with the right facilities.
I think it's fair to say that the development side of the business historically is dominated by Anglo-Saxon capital. Which is the logic consequence of student housing being a long-lasting product and asset class in the US. Then the evolution in the UK started somewhere in the 70s, and Looking into Samuel's figures, you see that the market capitalization in the UK is quite high, that the transacted volume for a single country is quite high compared to continental Europe. And slowly but surely, I think on the investment side, it's becoming a more common and more sought after product also by more conservative investment pockets. But in the current situation, A, low interest rates, and B, more question marks on other asset classes like hotel, like office, like retail, there is a very, very strong demand amongst institutional investors for student housing product all over Europe.
From our perspective, this asset class recently is no shore of capital. As soon as basically May, June 2021, the leasing take-up and occupancy start to confirm the defensive sort of resilient nature of the asset class. Those people who were considering but hesitating are now sort of looking at the asset class. Those of us from here who have been here more than 10 years know that 2022 probably will be a very expensive year and the yields will compress even more. From our perspective, we see more capital coming from Asia with tickets north of 100 million to deploy core plus, which is not easy because as we see there are not that many platforms that you can deploy this capital with. And then under the pressure of opportunity, we see especially insurance funds who are now sort of willing or they have mandate to take the development risk, not the planning risk. So they try to do the forward deals where they sort of dismiss the planning risk and looking for higher returns. So it's sort of opportunistic approach. And over here, fortunately or unfortunately, we see some kind of a mismatch of higher return expectations from the opportunistic capital that it is able to provide in geographies that they opt for, like Germany. So yields are 3.4. The yield spread is less than 100 bips. So it's difficult to develop margins. On the other hand, it's such a safe market that many people would like to allocate capital in this geography. So they need to look at elsewhere, especially Spain is on demand now, which is a sweet spot in between for the core plus or opportunistic capital. Poland is really hot these days, and other bigger countries. People would love to invest in France, but it's not that easy. So it's much more about the suitable matching between the capital and the opportunities, but there is more capital than opportunities, significantly more capital than opportunities. As Rainer said, it's so difficult to get something developed in this asset class, much more difficult than get the underwriting.
Now, the parallel with the co-working or the co-living market is interesting in that sense as well, because it is a new asset market. It's also management intensive. Recently, we had one of the sort of like trailblazers in the sector, the Collective, running into trouble. They had an international expansion plan that was not just Europe, but global. Do you see any reasons to doubt the long-term perspective or the trust in the market because of something like what happened to the Collective, or do you see it as a sign of developing market early stage? Anyone that?
I will be the last to comment.
You will be the last, yeah.
Well, then maybe I start. Collective wasn't the first. Just to remind you, there was Quarters.
Yeah,
which
that's
was the first one. Yeah, and regardless in which sector you are, the transformation from long leases into short leases and with the attempt of making a profit is something that might work in a booming market, but no one had the pandemic as a disruption and a shortfall on the radar, and they dipped into it. And I think WeWork has faced similar situations in another segment. Yeah, So I would not say it's a question of concept. It's a question of specific setup, meaning capitalization, backing by shareholders and investors, and risk appetite that you run operationally. And I think this is something an investor should look into before he exposes himself into the sector, and that's not specific to co-living, micro-living, or student housing. It's something that a prudent investor should look into per se. Yeah? And that's why I would say let's be careful with raising question marks on the business concept. It's just a question in this case of, let's say, the entrepreneurial translation of the concept into a business.
Right. But for you, does that mean that you are always looking for owning assets together with your partner, or are you also seeing lots of opportunities for the more operational model like the hotel industry had traditionally?
Yeah, I think everybody who's in that sector has gone through some trial and error processes and changes in business model. And as you might know, we are backed by Brookfield. And since Brookfield became our main shareholder in 2018, we are only developing and investing on the own balance sheet. Yeah, we're building an owned portfolio which is financed and structured in a way that it is resilient and can weather also unforeseeable storms. But I know a lot who are, let's say, working from project to project, finding new sponsors, finding new equity, and this is, let's say, a more stony route, yeah. And those types of business models are less resilient when the wind becomes stronger.
It's a good one, though. Eh?
I don't think this is a failure of a model or asset class. I think it's much more tied to the individual cases. But I have to say that the co-living as such, as a standalone, if it is not a hybrid like you running, but it's a standalone product, it's much more difficult, or it's much less efficient to run from operational point of view, because the average assets are 154 rooms, while in student housing is 274. So it's almost twice bigger assets, which are, we all know, the bigger the asset, the easier it is to reach the efficient OPEX and NOI, therefore. So if you run smaller assets, your OPEX is already big proportion of your revenue. And it's very young, not so much established asset class. Plus the fundamentals, you know, the tenants are not so forced to use it like students. They have to come. You are 18, 19, you have to study. You know, in co-living you have more options as a tenant. So I think that the exposure to risk, occupancy risk, and OPEX risk in co-living is greater. So one needs to be running that particular product much better. On the other hand, we need to realize that student housing has become a great competitor of a standalone co-living, because many of the student housing premises invited young professionals and suddenly started the market share game with co-living as a standalone. So the hybrid scheme seemed to be the best working and better than the co-living as a standalone.
I've got a couple of questions that have come in from the live stream, so thank you for those. Maximilian is asking, what's the panel's view on Poland? Where do you think is the market heading? Supply is very constrained there. So I don't know if anybody wants to pick that up. There's also one from Wilson, which is, thank you, Wilson, which is for students entering in the first year, who is the decision maker? Is it the student or the parents? I don't know whether Wilson, you're a parent there and you're wondering about that, but that's an interesting point. So let's just pick up on those. There was another one as well, which was around that OpCo-PropCo thing from Moreno as well, which was, you know, does the valuation side and the investors really value things for an OpCo side, or is it sort of 100% the PropCo side? So interesting to pick up those sides from anybody.
Should I start with Poland or do you want? Well, I think Poland is a highly interesting market, and you have a handful of multi-million inhabitant cities hosting strong universities, and the sector is more than immature. I think the first developer operators like Core State and others have gone into Poland quite some time ago. I think Milestone is going now as well. Harald mentioned yesterday, and it's highly attractive. And for sure, you need to assess yourself on how to factor in currency factors. It's not euro denominated; it's zloty. Construction costs have been rising sharply in Poland over the last 3 years. Rents have grown, but not to the extent like labor costs and construction costs. So these factors need to be embedded in the individual model that the developer operator is about to apply for himself in that market. And the next question, when I was a student, it was 100% the student deciding. Now I think it's 90% the sponsoring parents.
Is it? Okay, it was definitely 100% when I went.
We
So.
used to say that the student is the customer and the parent is the client. But on Poland, well, as there is more capital than opportunities and in this asset class, and it's maturing to the stage that is attracting all kinds of capital through the vertical structure of the risk that they are able to take, then investors are looking for volume. And there are only 6 countries in Europe that offer volume: UK, France, Spain, Germany, Italy, and Poland. In the UK and Germany, as the most mature markets, this is probably for core plus. But if people are looking for taking the development risk and the returns, they really need to go further. France is desired, but difficult. Spain is probably the most sought after these days for higher margins. Italy is not there yet. Some of the people, like Student Hotel, are successful, but not everybody is as experienced. So it leads people to Poland as the only sort of big country where you still can develop relatively good returns. And it seems like the last 3-4 years, people were sort of circulating around Poland. Is it the country there? Is the market there? There was a lot of stock open in Gdańsk, and 1,200 beds in September 2020 in the middle of COVID. And they got all occupied within a year. So the consolidation was confirmed, consolidation of occupancies in 1 year. They're looking at base camp, they're 100% full. They're looking at student depot, same. There are some smaller schemes below 200 beds. And the occupancies are fantastic. And now also the rents. So they start to be hitting, north of 450 euro, 500 euro. And suddenly the financial appraisals work. As Rainer said, the construction cost increased there. Even though you still can build for, let's say, south of 60,000 per room, we'd expected exit probably 5 to 7 years from now at around 100,000, probably slightly north of it. It offers a really sweet historic opportunity to develop the scale. So if you want to invest, talk to me afterwards.
Okay, there's a quick question. I'll just take this as a sort of last one from the feed here from Louisa, which is about Portugal, which is what's the percentage of international versus domestic students, which is probably for you, I would imagine, Samuel, but also what needs to be done in terms of the co-living, micro-living side to really boost that in Portugal, and particularly whether or not things like community are seen as a real value add at the moment post-pandemic. So I don't know if anybody wants to pick up any of those aspects.
Well, Portugal is a small country with much greater demand. So if you look at the map of a pipeline, you would see the biggest circles about Lisbon and Porto 4 or 5 years ago. But as the demand from mostly Brazil, faded away after the Science Without Borders sort of was cancelled in 2014, and it was some kind of a replacement for 2 or 3 years there, but then it was clear that this is done. So in combination of the pipeline and drying demand, then one needs to be very careful, and especially in Porto, that city is probably not able to sort of consume any more five-star product with about 650 euro for a single room. But Lisbon still offers some good opportunities for schemes in a good address, not necessarily some remote locations. So many people are still looking at Portugal, but it's a syndrome of these small European countries like Denmark, like Austria, that you quickly saturate them if too many investors look at it.
And a final one from me as well is, I mean, we've launched a magazine called Impact because there's a growing focus on impact, ESG, wellness. Obviously, student housing is part of kind of educational facilities, so fits into that impact, purpose-driven investment side of things, but also an increasing focus on wellness in terms of students there. So just very briefly, because I know we've got a very short time left, but how important is that? And are you beginning to see more of a focus from, let's say, that kind of purpose-driven capital looking at the sector?
Having developed over 10 years, it has always been an aspect because it has an impact on operational costs. So I think everybody in the sector in Germany is focusing on KfW standards. We do KfW 50 and 55 and 40, and which brings the efficiency of the buildings to way higher than the legally required standard. What I think all operators will have to look into is how they can improve their operational processes from a sustainability point of view, waste management, water management, and things like that. And this is something which will have a stronger priority going forward. And most of the operators are also starting to label their developments. LEEDs, DGNB labeling is becoming more and more important because if you look at the institutional investors, as long as they are EU dominated, they will face requirements from the taxonomy directive going forward. It's the same with banks who are driven by the European Central Bank to have their loan portfolios with quotes in real estate financing that follow ESG and other specific green requirements. So this is something you can't escape from, regardless of whether you like it or not. And I think for most of us it's an opportunity because our target groups have, let's say, a strong affinity to these aspects. And besides the fact that we have had them on our agenda whilst developing, operating anyway, we should also further and stronger take them into our marketing activities going forward.
Yeah, that's ASG was also always a part of student housing, especially the S with the community we created and the facilities. Alleen ESG, we take them to the next level now. ASG 2.0, you can mention it. And on the environmental, BENG is a new, almost energy neutral. But we realized that with new buildings. And the S we created with our community manager. So it's on the agenda with the housing already. I think also the investors see that now, compared to the normal housing, where the S is I think has a lower impact than with the student housing. So as a total, it's going to be a mature real estate product, and you can bring the ASG to a higher level. So I think that's a good thing.
Yeah. No, and just to add to that, I think what's really interesting also is that when it comes to the availability of financing under certain conditions, you can actually get a discount now whether it is on environmental performance, but also banks are starting to see that they could be, the operators and the platforms can be a partner to deliver social value, which translates in their case then into lower interest rates. And that's a very, very interesting breakthrough in the market.
Great, we're almost out of time, so I just wanted to do a quick 30 seconds, given that it says Outlook and Opportunities. We've spent a lot of time on Outlook and Opportunities, but boil it down to 30 seconds. Where do you see the opportunities? Rainer?
Product-wise, I think it's quite obvious that we have high potential for student housing and also for young professional living in a lot of European countries. Regionally or geographically, I agree with what Samuel has said. There are 5-6 countries where you can create sustainable value in the sector, and if you consider investing in that, focus on these.
The shortage is an opportunity, I think. We are talking now to the big cities in the Netherlands, but also in the triangle with the municipality and the university, to create locations and concepts in a very quick way. So that's a lot of opportunity for investors to create new products. So,
great.
With a little of a joke, you said, where are the opportunities? Well, where are they? Well, it's not many, but in terms of to find them, but where to look for them, I agree with the sort of tier 2 cities in terms of overall population, but tier 1 cities for the student population. Also, sort of in assets of 250 and more, so that you are institutional and you have more liquid exit. Smaller assets are same difficult to develop, but more difficult to transact. And definitely in building portfolios.
Great, thank you. Really interesting discussion. Thanks very much to everybody online. But in the meantime, if you could join me in thanking Frank and also the speakers and yourselves, that would be great. Thanks very much, everybody.